Listen up because this is a story you won't forget. My dog Kaiser once ate my stock certificates. Yes, really. Thought they were treats, I guess. Panic? You bet. Until I realized they were worthless. See, I bought those stocks based on a hot tip from a guy at the dog park. Lesson learned, don't take investment advice from strangers, or canines, or even worse, online wealth gurus that sell get-rich-quick courses. This hilarious disaster taught me a valuable lesson. Investing isn't about gambling on hot tips. It's about understanding the market, doing your research, and making smart, informed decisions. So buckle up, Buttercup. Uncle Jim's about to break down the stock market in a way even Kaiser could understand. As always, please remember we do not provide financial advice. The material covered is either for information purposes or for fun only. Now that's out of the way, let's dive in. Imagine a giant online marketplace, but instead of shoes and gadgets, they're selling pieces of companies. That's the stock market in a nutshell. It's where businesses go to raise money by selling ownership shares, we call those stocks. To investors, that's you. Think of it like a giant auction. People buy and sell stocks based on what they think they're worth. Prices go up when demand is high and down when it's low. It's a wild ride, but with the right knowledge, it can be insanely profitable. Remember the thrill of winning that vintage lava lamp on eBay? The stock market is similar. You're buying a piece of something you believe in, hoping its value will rise. But instead of a funky lamp, you're investing in companies you think will succeed. The difference? You're not just buying a product, you're buying a stake in a company's future. If they do well, their stock price goes up, and your investment grows. If they tank, well, let's just say you'll be glad you didn't invest your life savings in pet rocks. Let's decode some financial jargon. Stocks, remember, are like tiny pieces of ownership in a company. When you buy stock, you're betting on that company's success. Bonds, on the other hand, are like loans you give to companies or governments. They pay you back with interest. Think of dividends as a bonus. Some companies share their profits with shareholders by paying out dividends. It's like getting paid just for owning a piece of the company. Sweet deal, right? Ready to dive in? Your step-by-step guide to stock market domination. Well, almost. First things first. Open a brokerage account. This is your gateway to the stock market. Think of it like your online stock shopping cart. Next, research. Don't just buy any old stock. Look at company performance, industry trends, and all that jazz. Once you've found a stock that tickles your fancy, decide how much you want to invest. Remember, start small and gradually increase your investment as you gain experience. Now hit that buy button and watch your money potentially grow. Rookie mistakes and how to avoid them. Don't be that investor. Don't put all your eggs in one basket. Diversify your portfolio by investing in different companies and industries. This spreads your risk and protects you from market volatility. Remember, slow and steady wins the race. Don't panic sell when the market takes a dip. It's like selling your house because the neighbor's dog barked too loud. Ride out the storm, and remember that long-term growth is the goal. The power of long-term thinking. Patience, my friend, patience. Investing is a marathon, not a sprint. Don't expect to get rich quick. The real magic happens when you invest consistently over time, allowing your money to compound and grow exponentially. Think of it like a fine wine. It gets better with age. The longer you let your investments mature, the greater the potential rewards. The perils of panic. Keep calm and carry on investing. The stock market can be a roller coaster. There will be ups and downs. Don't freak out and sell everything at the first sign of trouble. Remember, panic selling is the investor's worst enemy. Instead, take a deep breath, assess the situation, and make rational decisions. Remember, market fluctuations are normal. It's how you react to them that determines your success. Investing, your ticket to financial freedom, and maybe a yacht. Investing in the stock market is one of the most powerful ways to build wealth over time. It's your ticket to financial freedom, early retirement, and maybe even that yacht you've always dreamed of. Remember, the stock market is not a get-rich-quick scheme. It requires knowledge, patience, and a healthy dose of risk tolerance. But with the right approach, it can be your secret weapon to achieving your financial goals. So, what are you waiting for? Start investing today. Let me know your thoughts in the comments. Thanks for hanging with me. If you liked this video, you're going to love the one on your screen right now. It's packed with even more great information for you to enjoy. Click it, and we'll see you on the other side.